What's up, guys? Welcome to Financial Tip Tuesdays. Today we are talking about a very interesting topic that came to light with the new tax laws that the Trump administration passed through just a couple months ago. So today we are talking about the QBI deduction, or the Qualified Business Income Deduction. And this applies to you if you're an LLC, if you're an S Corp, or a partnership, or a sole proprietor. This deduction applies to you, so listen up. For corporations, if you're a C corporation, the tax rate has been lowered to 21% flat tax. And so this applies to most pass-through income, which is the LLCs, S corporations, and partnerships or sole proprietors. So the first question you have to ask yourself as a business owner is, are you a personal service business or are you not a personal service business? And a personal service business is generally any business that relies on an individual, either their reputation or their knowledge base, to provide a service. So like accountants or lawyers or other types of services like that. And the question you need to ask yourself is your income below the thresholds, which is $315,000 if you're married filing jointly, or $157,500 if you are single. So if your answer is no to that, if your income is below that amount, then you get the full 20% deduction. If you're above that $315 or $157 dollars of income threshold, then you have to drop down to your next question, which is your income between $315 or $415, so a $100,000 phase out. And if you are between that amount, then your reduction is reduced. But if you are over even that additional $100,000 phase out limitation, then you get no deduction at all. And so on the other side, if you are a non-service business, really the only difference is if you are over the entire phase out limitation. So if you're over the $415,000 of income, and you're married as a married individual, or $257,000 as a single individual, then instead of getting no deduction, you actually get to drop down into a little bit more complex of an equation to figure out what your deduction is, but you still do get a deduction. So if you're over that limitation, you drop down into this box, which is the lesser of the 20% deduction or the greater of the W-2 wages from the business times 50%, so half of the W-2 wages paid out, or 25% of the wages plus 2.5% of the unadjusted basis within the company. And so obviously when you get down into this area of trying to figure out whether or not you get this deduction, it's very important to talk to either your tax professional or your CPA to figure out what the correct amount of your deduction is, because it is fairly complex. And so in a nutshell, this is what the deduction is and how it kind of works. If you have any questions, please feel free to reach out to me. My name is Stephen Gabrielson. My email is steven@slgadvising.com. I'd love to hear from you. I'd love to hear your feedback about the videos, and if you'd like to hear anything else as we move forward in the next few weeks. Have a good one, guys. Thanks.